Hello and welcome to Moving Iron Podcast. This edition of the Moving Iron Podcast is brought to you by these great sponsors. Axon started out of a passion for keeping agriculture moving. Imagine having 100 years of tire and wheel knowledge in your back pocket the next time you sell a piece of ag equipment. To find more or become an Axon dealer, please visit axontire.com. This podcast is also brought to you by Valley Transportation. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 or go to valleytransinc.com for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is also brought to you by Ag Direct. No matter how you buy your ag equipment, from a dealer, auction, or a private party, Ag Direct can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher time and time again. Through the years you'll find us here.
Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Hey, Shawn, you wear hats a lot down there in Florida?
Right here.
There he goes. He's got his South Carolina hat on. There you go. Look at that. Well, if you want to get a free hat, go send an email to marketing at axontire.com, and they'll send you a free Alliance baseball cap. So to beat off that hot Florida sun, you'd be well,
if you send me a pumpkin peeler at it, then I'm really interested in getting a pumpkin peeler.
Okay, so I'll see what I can do for you. But send an email at marketing at axontire.com and they'll send you a hat. I promise that for sure. So do that. All right. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs, or go to valleytransinc.com. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy ag equipment, whether it's from a dealer, an auction, or a private party, Ag Direct can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Shawn is with Hackett Financial out of Boca Raton, Florida. He's nice enough to come on a couple times a week to talk about what's going on in the marketplace. Shawn, how you doing this morning?
Never been better.
Never been better. Well, that's
never been better.
That's pretty impressive, Shawn.
Because I'm on your show, I've never been better.
Oh, well, there you go. See, so
yeah,
that's outstanding. You sent out a report this morning. It got into my hot little hands here about an hour ago, and I was kind of reading the high points of it, kind of going through it. But you're basically talking about what's going on with your natural climate change models that you've talked about, and what that looks like, and you're talking about the rough start. We've seen that. We've talked about that. It's coming true. I talked to a friend of mine in Illinois yesterday, and he's like, "Man, Shawn's right. They haven't turned a wheel yet anywhere, and it's still slow getting after it. And some guys have got some stuff in, but this is delay after delay after delay." And then you're talked about what was going on in the second crop corn down in Brazil, and that's starting to come true. So I guess, Shawn, talk about those two topics.
Yeah, we've been worried about this spring for a long time. We've been expecting and anticipating a late ending winter, a lot of cold, a lot of snow, especially in the northern plains. They had record snowfall in North Dakota and parts thereby. In fact, flooding on the Red River. We've actually broken records of the Red River cresting, and it looks like with the moisture we're going to continue to receive, that we could have the latest highest readings of the Red River in late May ever seen, and since we've been recording this in over 100 years. So this is not good for anything going on in the northern plains, whether you're trying to plant spring wheat, whether you're trying to plant corn, whether you're trying to plant, and this is going to Canada, it's just as bad. So this is really a problem. I mean, this is kind of one of those weather events, Casey, like we just haven't really seen that. And remember, these were the same areas last year that had a 1 in 100 year drought. Mm-hmm. Now we're having a 1 in 100 year precipitation snowfall event. That's how Mother Nature works. It giveth and it taketh away. And then of course, right to your south, the southern western plains, 1 in 100 year drought. So
I'm there.
I'm saying you have these two bifurcated regions back to back with a line, creating these two weather extremes. KC winter wheat, at least half the KC winter wheat crop, worst ever. And of course, spring wheat, after last year's terrible crops, hoping to get off to a good start, hoping to get more acres planted, and it's just not going to happen. So it's setting up, Casey, as we've been talking about for a long time, that KC wheat, spring wheat, and corn are setting up for, we think, some kind of a weather-driven blow off top here in late May and early June that prices all this crazy weather in, including this escalating drought now in second crop corn, Mato Grosso, in Brazil. Remember now, let's make sure we understand the difference between this year and last year in second crop corn. Last year, no rain, and they were planted late because there was no moisture. So they had no subsoil moisture. They planted late, and they had a drought with tons of heat, the worst ever. Right? This year is going to be better, but we were hoping for a top bin buster crop, 110, 115 million metric tons. Not going to happen. We started off with great subsoil moisture. We got the crop planted early. It came out in fantastic shape. But unfortunately, the month of April, if the rest of the week finishes out the way it's supposed to, will be the third driest in 50 years. It's been cool up to this point. That's been saving the crop somewhat. But unfortunately, the next 2 weeks, we're looking at mid upper 90s, potentially 100 degrees in this key Mato Grosso area of Brazil. So the crop conditions are going to fall rapidly as pollination is in full swing. So it's going to definitely be better than last year. Last year I think was around 85 million metric tons. This year we think it's going to be more around 100 million metric tons, but that's a huge lowering of crop potential from what was expected at a time that we have no corn ending stock. So it's just another reason to expect this blow off top potential here, Casey, in late May, early June, that we think could set the high for the year. Even if we have a weather scare in July, like we typically do, probably not going to get ourselves as bulled up as we are likely to get here later on in May. So,
yep. All right. So real quick, let's talk about this for a second, because of where I live at and what I see happening. You're talking about the 1 in 100 year flooding conditions that you see up in North and South Dakota. Last year, like you talked about, it flipped around. It was a 1 in 100 year drought. It seems like my area where I'm at, comparatively to where they're at there. So I'm in the Nebraska Panhandle, and the Nebraska Panhandle, Eastern Wyoming, Eastern Colorado, Western Kansas kind of corridor there. That really seems to do the opposite of what's going on in that North and South Dakota region. When it's really hot and dry up there, it's really not really cool and wet down here, but I mean, it's a way cooler and way wetter, but, and then you flip it around, when it's dry up there or what's wet up there, straight down here. So you're starting to see that. Is that something that you've noticed? Is that something you see where there's a flipping of those areas throughout the country like that?
Yeah, it's not uncommon for that to be the case. The way that, because of the mountainous terrain and how the airflow tends to operate and what creates these, wet, dry patterns in the northern plains, it does tend to create an opposite airflow pattern in that box that you talked about. And unfortunately, the box this year, that southern Texas, we've talked about, southern Oklahoma, western Oklahoma, western Nebraska, western Kansas. That box has just missed out. They just missed out. But the other half of the KC wheat belt's actually gotten the moisture and actually is in pretty good shape. So you have half the crop that's the worst rated ever. The other half isn't too bad. But right now it looks to me, Casey, that the bad is worse than the good is good, for lack of a better way of saying it. And so we have the crop ratings last night. Overall, I think they came in at 28, or I think the second worst conditions ever for that time. And I don't see anything in the weather pattern. It's good. We need rain to come in between now and mid-May, and then it doesn't really matter what happens. And I don't see it happening.
Yeah.
I think that's why this winter wheat market's got to price whatever it has to do. It's going to have to price that reality in and then move on. And we're in the process of pricing that in right now, forgetting what's going on in Russia. It's just a U.S. weather driven market right now. And what the spring wheat market's got to do is got to figure out, what are we looking at? How many acres are we going to get planted? And whatever we do get planted, what's the prognosis for the yield potential if we have this kind of a wet, situation? The market's going to have to price whatever they think that means. And so it's really an interesting situation that's developed in the wheat market. And corn, is really a situation where it also, because of what the USDA said, that we're going to plant a lot less acres than everybody thought. Everybody wanted an early start. Let's get going. Let's get those planters rolling. That's not happening. And it's not going to happen. So now it brings into question, maybe that is the number.
Right.
Or are we going to be planting corn in June like we did in 2019 and roll the dice? Maybe we will, maybe we won't, but there's so much uncertainty. We have to price all that in. And I think we will by the time we get to late May, early June. And then after that, it's going to be hard. We think we're going to have a very, very good finished back half of the year growing season. We think we're going to have record soybean yields. And so whatever we do there, we think that's it. And then we just work our way kind of down. Maybe have a little weather scare in July, but we think this is really an important time for producers to really hone in on what do I need to sell? How much do I need to sell? How far out do I need to sell it? It's not a time to throw caution to the wind on this. These are prices that are probably going to set a high watermark for a little while before we get weather rocking and rolling again, because El Nino is going to be very good for U.S. It's going to be very good for South America. Asia is going to be in trouble, but that impacts different crops than the ones that impact U.S. and South America. So,
yep. Okay. So you can't have this conversation about ending corn stocks without talking about ethanol, and you see happening there. I mean, you've got, they're buying record high corn to distill and to move forward with. I guess as you look at ethanol right now, what are your thoughts there?
I've always felt, regardless of government support, lack thereof, and subsidies and all those kind of things, if it's economical to produce the ethanol, everyone will produce as much ethanol as they can, just like the bean crush. Mm-hmm. If it's profitable to do the bean crushers will crush as many beans as they're able to until the margins drops. So, we have the oil price hovering around 100. We have the U.S. government desperately trying to shove strategic petroleum reserves onto the market to keep the price down. It's not a solution. It's just a temporary Band-Aid. But I mean, the bottom line is, we either need to have a really, really nasty global recession to knock the oil demand down, or pricing to go a whole lot higher. And so that would suggest to me that, overall, we're looking at high energy prices into the summer and into the early fall, and ethanol demand should be strong. Now, if we get $10 or $12 corn, maybe that won't be good anymore. I don't know. You know what I'm saying? Obviously, at some point, price gets too high, or if there would be a surprise, if Saudi Arabia say, all right, we're gonna max out production and we're gonna crush the thing to 65, that'd have a huge impact. So, but looking at what's likely to happen, I think ethanol demand is going to be solid, Casey. I don't really see that faltering without a much higher corn price or without something dramatically changing, with the Middle East.
Yep. All right. Hit on the wheat parts, what I want to talk about. And then let's jump down and let's spend a little time talking about what's going on in cattle and hogs. We've talked about that quite a bit on here, what we see happening there. And there's still that little bit of a rough start this week when you look at what's going on with cattle futures and what that looks like. But there's still that whole underlying scenario out there of animal counts. So I guess talk a little bit about cattle market we see happening there.
The livestock sector is just caught in the middle of two powerful forces. One force is there's not enough animals, and there's not going to be enough animals. Against, we're going down the tubes, we're going into recession, the Federal Reserve is raising rates, China's locked down 500 million people, they're not going to need any pork. And, so we're just stuck. And then we have this high feed price that doesn't make cattle ranchers, want to expand the herd. In fact, it makes them want to liquidate the herd. So we're stuck. And depending on the week that you're talking about, if they come in and focus on the supply, you get a strong rally. And they come and they focus on, the demand side worries and some extra herd liquidation, they knock the market down. So it looks to me like it's going to continue to be a choppy market. I still think it trends upward, because I do think the grilling season is still going to be pretty good, but we need to get the top in feed. We need to get the corn price topped out. We need to get the market convinced that we've made a formidable high and we're coming back down, and that the livestock producer is going to get a cheaper feed price that he can buy, that he can lock in, that's going to make him want to stop liquidating animals and at least stop doing that. And then that allows the tight supply to really kick in with the demand that's out there. And so that's kind of where we're at. But I do think that there's an opportunity that if we're correct about this final spike high here in corn and feed prices here in mid-late May, that could be your final knockdown in the livestock sector before we kind of flip the switch on these two bifurcated trends and flip it around where you get the 2013-14 style livestock rally on the post of the 2012 high in corn and feed prices. We could be looking at a repeat performance of that timing window to what we're seeing now. It looks to me like that's the setup here. Later this year could be pretty interesting and exciting if we can avoid, some crazy economic troubles. So,
yep. Okay. So with that being said, with the continued lockdowns we've seen in China and the slowing of their economy, I guess, what's your thoughts there? I mean, on exporting of hogs and even beef to China right now? And do you expect to see that slow down, or do you think that have really any effect on what we see on the overall price?
My working theory is on food. Chinese will find a way to get into the country if they really need it. I think the Shanghai port, which is really the port that's in question, that's really a lot more kind of gumming up the global trading system, is more about us receiving shipments from them than necessarily them receiving our food. I mean, I think they need the corn. If they need the pork, they're going to buy it. And hey, guys, you wait outside, and these guys are coming in. We'll get to you later. I mean, I don't think that's going to impact the food if they need it. Mm-hmm. I think it could impact a lot of things that we need, that we buy from China, that may be delayed or short supply and that sort of thing. So I think it's more of that kind of an issue more than it is our supplies not being able to make it over there if they need the supply.
Right on. Okay. All right. Last topic. Let's talk a little bit about what we see happening in the energy market, because you hit on it there with ethanol and what you see there. Oil price is still hovering around that $100 mark, kind of back and forth. You see it go up and down. There's a lot of volatility there. Obviously, everything's hinging off what we see happen with Russia, as far as the Russia-Ukraine thing happened that is going on there. As you look at what's going on with energy, especially oil, what are your thoughts there?
I'm going to profess I'm not an energy expert like I am in agriculture, but I know enough to be dangerous. But my understanding of the situation, and for those that research this far more than I do, who I believe are really smart, who've done some incredible work on this stuff, is they believe we are going to enter the end of spare capacity come the fourth quarter of this year, absent some calamity in the global economy, meaning that the spare capacity that Saudi Arabia has always had to, whenever they want to crush the market, their view, or many people's view, who really are smart about this, believe that we're going to pretty much use up that spare capacity and that we won't have it. We've never actually ever used up our spare capacity before. This would be the first time we ever are going to test that theory of what happens when you reach no spare capacity in the marketplace. And the view of many is that this is going to trigger potentially a supply pinch event if anything, goes wrong at all. Meaning like a lot higher.
1970s?
Well, yeah, I mean like 150, $200 oil kind of stuff. Okay. And so then if you think about natural gas, and that's something we do know a little more about.
Right.
When you look at fracking and you look at the fracking industry that really got going in 2006-07, and it's been really providing cheap natural gas to the U.S. for this entire period of time until just recently when we had this big spike in natural gas prices that was part of our forecast. When you look at what part of the fracking areas that are still available to go get, and you look at how much production that can bring online versus how much production we're losing from those production areas that are in terminal decline, it looks like we could reach that we could use up our spare capacity domestically here in the U.S. We've always had spare capacity. That's what's kept the natural gas market low. Every time we got the price up, we just produce more, and that was it. We buried the market. But it looks like we could reach no spare capacity in the U.S. later this year on a combination of what I just mentioned about the eroding wells versus the upcoming wells and the mismatch between those two, and the fact that this LNG thing has just gotten really going, and we're going to be sending 35% more overseas to LNG. We could be also reaching no spare capacity in the U.S. It's the only cheap energy source left in the world is U.S. natural gas anywhere. It's the only one. If that is in fact true, and I think that it is, then we have a problem. And that this move higher to $8 that we saw briefly before we're getting the seasonal correction isn't over. That we actually are going to have a secondary rally into the fall that could take us substantially higher. Remember, the rest of the world is at 30, 35, 40, natural gas, and we're still sitting at 6 and 7. We may be in the process of connecting with the rest of the world permanently, meaning we're permanently going to get rid of our circular domestic oriented pricing mechanism and actually create and actually have our natural gas be priced the way everything else is. And if that's the case, cheap natural gas is gone, and gone for a long time. And that would mean huge ramifications for the long-term price of fertilizer in the U.S. One of the saving graces of the U.S. is that we've had this cheap natural gas that's provided this cheap fertilizer in Canada too. If we lose that edge, then we lose some of the advantages that agriculture has had relative to the rest of the world. We've had to pay these much, much higher prices for energy, for fertilizer, and things of that nature. So energy is a really interesting place. We're about to test the boundaries of what's possible here, Casey. And like I said, we could be entering. We think we've entered an energy crisis, but it may actually just be the beginning of a much more protracted energy crisis later in the year, unless we have a really, really, like I said, a really, really nasty economic fall off here that kind of kicks the can down the road in 20. Either way, we're going to get to the end point. It's just a question of, is it going to be later this year, or will a recession kick the can down into 23? Hard to predict those kind of things, but that's something that I worry about. And I think that's something that everyone in agriculture should be worried about. So
right on. Well, good stuff as usual, Shawn. Folks want to reach out to you and get more information about what it is you're doing at Hackett Financial. What's the best way to do that? What's the best way to get your newsletter to you?
Our website is Hackett, HACKETT, advisors.com. We have all kinds of information on there. There's a link on there to subscribe if they wanted to, if they find our information valuable. It's taking what we talk about in your show and taking it to another level. So
right on. It's great stuff. You guys subscribe to that newsletter. You're going to get tons of information that you're not going to find anywhere else. I can promise you that. It's very few and far between to find the stuff that Shawn's talking about and published out there. So make sure you do that. Reach out to Shawn, talk to him a little bit about what's going on there, and go from there. So Shawn, appreciate you being on the podcast, man.
Thanks, Casey. We'll look forward to it next week.
Right on. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you find the latest editions of the Moving Iron Podcast, all at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Go to the YouTube channel, Moving Iron Podcast YouTube channel. And I'm actually on Snapchat, which I don't even know how to use yet. It's the most confusing thing on the planet. So check out, I sound like a 90-year-old guy over here talking about Snapchat. But check it out. I'm old Case on Snapchat. So I'll post some stuff there from time to time when I figure it out, and then go from there. So if you're interested in coming to Moving Iron Summit, make sure you check that out. Go to MovingIronLLC.com. Go to the Moving Iron Summit tab, and all the information is there that you can possibly want. If you need more information, send me an email at MovingIronPodcast at MovingIronPodcast.com, and I will be happy to get back to you. So with that, I am Casey Seymour with Shawn Hackett. Let's go smart, folks. Out. Sun Tire is going to have more tips, tricks, and client advice throughout the year, and in September at the Moving Iron Summit in Nashville. If you're looking to sign up for the event, please head over to MovingIronLLC.com. We hope to see you there. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 or go to valleytransitinc.com for all of your trucking needs.
At Valley Transportation, our goal is to help you reach yours. And no matter how you buy ag equipment from a dealer, auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com.
Moving higher in the 21st century.